Well, hello and welcome to Chartbusters. We are coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel, with me is Vinny. And the markets, though under pressure, have recovered a little bit from the lows of the day. The obvious trade was to go ahead and buy the dip. That's played out to some extent, but just keep an eye out because there'll still be some leverage positions that'll be getting knocked out in the next 60 to around 90 minutes or thereabouts. So keep that in mind. Hey, Vinny, what's up?
Hi, Nigel. So yes, we'll keep an eye out on that. What happens in the 60 to 90 minutes next? That'll be key to watch out for. As of now, 24,870 is what the Nifty is at. But let's welcome on board Nalin Kant, who's of automotive division of Mahindra & Mahindra and executive director at Mahindra Electric Automobiles as well, to discuss the auto sales numbers. Hi, good morning. Thank you so much for joining in. You managed to report a good number, inline set of numbers with what the street was expecting as well. While obviously you have the support coming in because of GST, February sales were good. How is the demand trend expected to be?
Firstly, Nigel and Vinny, thank you for having me on the show. Strong month, if you ask me, and 19% growth on the SUV front. Compared to the industry of about 18% SUV growth, I think they've out-tracked. I think the piece which is even more heartening for us is from a Vahan registrations perspective, which tracks end user or end customer demand itself, that grew at about 21.4% year on year. So that gives us strong confidence that the portfolio has strong traction with the market. And of course, beyond the GST, there's a couple of major launches we had done in the previous quarter and in Jan as well. 7XO on the ICE side and we had 9S on the EV side. Both these products have gotten very strong customer reception, and that's helped us with February bookings as well and billing as well.
Hi, Nalini Kant. Good to see you, Win. Quick word before we get to the demand trends. There was an Indonesian order. I think it had back to 35,000 units of Scorpio pickup, to an Indonesian company. And there were some doubts with regard to that. Any doubts? That order's on, right?
Yeah, we've started shipping vehicles to Indonesia. In fact, the first set of vehicles have already reached, and we continue to deliver on the order that we have. There's no update beyond that at this point in time from our side.
The size of the order as well, we understand it was 35,000 units. It hasn't been scaled down or anything, right?
Yes, that's correct.
Not scaled down.
Like I said, we're delivering to the 35,000 units. Yes, absolutely.
Okay, got it. All right, let's talk about the EV volumes then. I think they were around 4 to around 5,000 units, and you were talking about it scaling up. What was it in the past month, and how do you see it pan out, say, in March? Because I think February would be a shortened month, but in March, you'll see a bit of an uptick?
Yeah, no, absolutely. And even in Feb, if you look at it, you're right, it was a short month. But from an overall volumes perspective, EVs, we actually delivered north of 6,500 vehicles. So the first time we've actually crossed the 6,000 mark on these vehicles as well. So even in a shorter month, I think it's done well. Look forward to a strong March as well. And of course, 9ers would be a backbone of that. But we continue to see good traction on 9E and BE6 as well. And in the 9E, we've actually introduced a new couple of variants. We announced it yesterday as well. So we're hoping that that starts to give some heft to the overall number. If you see past 1 year, our volume has been in the 4,000 to 5,000 range. Our capacity is 5,000. We are scaling up that capacity to 8,000 by April. So with 9S coming in, we are hoping that that 8,000 capacity will be largely utilized as well.
Okay, so you're expecting 8,000 capacity. We'll start seeing this in Q1 FY27 then, right? The 8,000 you're spoken about, even for EV units. So then from April onwards, we could see these numbers coming in for 8,000, 9,000 units of EVs, right?
8,000 of capacity, we normally utilize about 80% of capacity. So you should expect us to be around the 7,000 mark in terms of volume, 6,500 to 7,000, which we already started to scale up to, right? Feb is at 6,500. We are hoping we'll inch up from there.
And then when do you expect it to reach 8,000, 9,000 units, right? Because I believe when we had spoken to Mr. Anish Shah, he had spoken about it at one point of time, reaching that 8,000, 9,000. Would it be in FY27 itself?
Yeah, so we have a bunch of launches coming in later part of F27 and early part of F28 on the EV space. So that's probably the right time for scale up. Like I said, our line itself is ready for about 10,000 units, and we operationalize incrementally as new launches come in as well. That's an easier way of doing it. So that's what Anish was probably referring to at that point.
Okay, all right. Final question before we let you go. The feedback you're getting is that the CV cycle is in very, very fine rhythm. What part of the CV cycle are we in? Because a lot of ancillary stocks as well are doing well. A lot of them are talking about they've been totally booked out, and CV is showing traction. So according to you, where are we in that CV boom cycle? Middle, end, start? What do you think?
No, I would say that in the early days, if you ask me, and Nigel, the replacement cycle is definitely well underway at this point in time. But the heartening news is beyond just the replacement cycle, we are also seeing the first-time buyers, what we would call the driver segment, folks who have been driving a CV and eventually wanting to buy their first commercial vehicle. That segment has started to kick in as well. So that's a great sign for us. So it's replacement cycle plus new customers coming into the fold. So I would say it's early days for us in the cycle. Normally, a cycle lasts about 12 to 18 months. So we'll see how it plays out. But we're quite sanguine on this segment right now.
Beautiful.
Just one question I want to know, given the current geopolitical tensions that are going on across the globe, any concerns on export fronts or any blips that one could expect to see then?
Specifically to the Middle East, we have very limited exposure from an exports perspective, volume itself. We are largely in South Africa, Australia, and South Asia markets, so we don't necessarily see a big risk from a volume perspective from that side.
Okay, no, not much of a risk, but in case, there is any stoppage in terms of Red Sea, Strait of Hormuz, as of now it is not. But would that then cause any concern for you all, or nothing on that front affects you all?
Early days to see how that plays out. It can play out in multiple different ways, but we have had challenges in the Red Sea in the past as well. We've had some geopolitical tensions in different ways and forms earlier. So we'll watch it very closely and we'll take decisions as we go through. But at this point in time, very early to say if there's any kind of disruption coming out of it.
Okay. Thank you so much, Nalinikant, for joining us this morning, speaking to us about the numbers. Hope to see you again next month as well after you report next numbers. Thank you so much for that. But on that note, we're going to slip into a very short break. We'll be joined by the management of CleanMax Enviro Energy Solutions. Kuldeep Jain will be joining us, and this is after the listing. Stay tuned in for that conversation.
Global markets in a bit of a tizzy, and so is the Nifty as well as the Nifty Bank. The good news is both the Nifty and the Nifty Bank have come off a little bit from the lows of the day. And by the end of today, you'll actually not want to revisit those lows that we saw in the first few minutes itself. From the Nifty, the problem is a couple of big names like L&T. They're dragging the index. In fact, L&T is one of the top losers, down close to around 4.5 to around 5%. Giving it company on the downside is Interglobe Aviation, because obviously flights are cancelled, and also you have fuel costs that have spiked up, so and that could hurt them as well. Adani Enterprises, that's the other stock that's part of the losers list. On the flip side, defense is going to be top of mind now, going by the geopolitical tensions, and BEL, one of the top gainers on the Nifty. Hindalco as well is giving it company on the upside. But it's not just BEL that's higher. Defense buzzers in trade today include the likes of Solar Industries. It's been a wealth creator over the last few years, and that one's up close to around 4%. Bharat Dynamics actually off late has been an underperformer, but that's participating today as well. In times of uncertainty, a lot of money moves to gold as well as silver. And from the stock market perspective, you have Hindustan Zinc, that's the lone silver play out there. Muthoot Finance, that's a gold financer as well, so that's a play on gold prices. And MCX, because there is some fundamental news as well as volumes on gold will move up. In turn, they will earn some more money. So all those three doing well in trade. But otherwise, from the broader markets, there are plenty of stocks that actually started off in the red, and they've seen a big recovery from the lows. Case in point being a Tejas Network. The stock is up close to 50% just in the last 1 month or so. Fino Payments Bank, there's negative news flow, but the stock is still up close to around 8% from the lows of the day. And Sarda Energy as well, we've got the Supreme Court verdict that came in their favor. That one is up close to around 5% from the lows of the day. So plenty of action from the broader markets. By the end of today, the number of stocks advancing. You'd like to see the number around 6 to around 700 odd. Remember, the start of today, it was just around 100 or thereabouts. Vinny, coming back to you.
Thanks so much for that, Nigel. Surely watch out for that advance decline ratio and where it's going to be headed. But we have the next management on the show today joining us right now. That's CleanMax Enviro Energy Solutions. Saw a bit of a muted listing today, but given the market condition, 9% discount is what it listed at to its issue price. To talk about the outlook of the company going forward, we have Kuldeep Jain, founder and managing director, joining us right now to discuss the business and growth going forward. Kuldeep, good morning. Thank you so much for joining us, and congratulations on getting listed. But let's get started with some bit of a numbers, right? Now, finally listed, so you can give us some idea in terms of what we could expect. Let's start with the EBITDA performance, right? For H1 FY26, when you've seen in terms of EBITDA, your EBITDA margins have come in at 68.4% versus a 72% last year for the first half of the year 25. What is the run rate that one could expect from the business in terms of margins, FY26, FY27? Any indication you could give us on that front?
Thank you, guys, and we are delighted to be listed today on the stock exchanges. In our business, we add about 1,500 megawatt of solar and wind capacity every year and sell the energy so produced to corporate customers, which we are very well on track to do. We don't issue EBITDA guidances, but we've historically been a 58% annual growth rate on EBITDA kind of business. And as of October 25, we had about 6,000 megawatt contracted, but of which only half is built and half more is under construction. So lots of growth still to come.
Okay, hi Kuldeep. Good morning. Good to see you in. A bit of a tricky one, right? Not the best day to get listed, but it's been a journey for you
Nigel.
as well as the team in terms of coming so far. Markets today not obliging, but your investors will be interested in creating wealth over the longer term. What's this backstory with regard to this jacket that you're wearing?
Thanks, Nigel. Thank you for asking. I wanted to not stand alone at the NSE platform while doing it. So I got a jacket made with all 600 of CleanMax employees on it. So you can actually see everyone. I wanted to make myself feel and make my team feel that, we are all in it together. So that's the jacket that I'm wearing.
Okay, interesting. Oh.
And I'm still at the National Stock Exchange. So that's the jacket we got made for this. Thank you.
All right, good.
So it's just the individuals of CleanMax.
It's a team effort then, and nice to see you're actually wearing them on this big day. Let's talk about a couple of aspects then. What about business? For the last year, if you look at it, your EBITDA number was ballpark around 1,000 crores. I know you don't give us a guidance, but in the previous 2 years, if I look at it, your EBITDA doubled in 2 years. From around 400 crores, it went to around 1,000 crores.
That's right.
In the next 3 years, there's a probability that this EBITDA number doubles?
Yeah, and absolutely there is, Nigel, because if you look at our business, 3,000 megawatt is built and another 3,000 megawatt is under construction, which will happen in the next 2 years. So therefore, just by those simple metrics, that doubling kind of number makes a lot of sense. And what we see also is that we've had a huge boom in our customer offtake from data and AI as a segment. And data and AI is today already about 43% of our contracted volumes, with all the data centers in India as well as with all the big tech giants. And we, given the global mega trends in data and AI, we see a lot of good prospects for that line as well.
Sure. Kuldeep, a quick one. What's your plan in terms of debt reduction strategy? Some of the amount that you've raised will be paid towards debt. So how much will be left on the books, and cash and cash equivalent also? What are you looking out for, or what can we expect by the end of FY26 year today?
So we are repaying about 1125 crores of debt out of the 1250 crores of primary proceeds, which will lower our debt to EBITDA ratio, but our net debt to EBITDA is already at about 4.6. For the rest of the renewable energy industry, that number is closer to about 5.5 to 6 times. So we are in any case more conservatively geared compared to the rest of renewable energy industry, and we will repay some of that debt.
Okay, all right, Kuldeep. We look forward to having a longer chat with you as well as the team. But congratulations to all of you all. Like the idea with regard to the jacket, but the street will be looking forward to better numbers in the time to come. Initially, the stock is down, but delivery of those numbers that you're talking about will be top of mind. Well, time to slip into a short break. We have another management waiting for us. KEC is waiting for us on the other side to give us a broad sense in terms of their exposure to the Middle East amidst the conflict. Welcome back. You're watching Chartbusters. You're on CNBC-TV18. As promised, let's get in Mr. Vimal Kejriwal, the MD and CEO at KEC International, that joins us on the show. Hi, Mr. Kejriwal. Good morning.
Hi, Nigel. Good morning.
Thanks a lot for joining in, sir. Before we get to business aspects, just wanted to ask you about your employees that you have in Middle East. Hope all well and everyone is safe.
Absolutely safe. Thank you. All are well.
Well, that's good to hear because the human aspect first is what we would like to focus on. Let's talk a little bit about business then. I believe 20% of your business has exposure to the Middle East. Could you tell us what are the conversations in the last 40 hours or so with your customers? Is work functioning as normal or has there been a bit of a standstill, just temporary?
So basically, if you look at our exposure in Middle East, we have around order book of around 10,000 crores, which is roughly 20-25% of our overall order book. And it's 50% of that is in Saudi, and the rest is divided between UAE, Oman, Kuwait, and a little bit of inter-Emirates work. So that's a part of the order book which we have. As far as today the situation is, UAE is completely shut down. It's based on what is happening in the local scenario and the advisory from the local government. We have shut down all work on the projects and also the factories right now not working. But the rest of the places like Saudi, Oman, etc., the work is going on as usual. So there's no stoppage or nothing else is happening on the rest of the Middle East, if I can say that.
Okay, so Saudi, Oman, where your business continues to be as usual, the impact that has come in terms of the halt of the factory that you've spoken about, what would that be in Q4 that we could see, sir?
Honestly, too early to say. It depends on when we start. Otherwise, if you look at the revenue, it will be around 50-60 crores per month is the revenue. I think we do around 600 crores and odd from that factory. So 50 crores is a monthly revenue. So depending upon how many days it is shut down and what happens, it's been shut now for, I think, last 2-3 shifts. So, as of now, I don't think it's significant. But if the shutdown continues for a long time, then maximum is 50 crores for a month if it's shut down for the entire month.
Okay. So 50 crores if it's shut for the entire month is maybe, if it's shut for the entire month that you can see.
Yeah.
Okay.
Yeah.
And so as of now, no advisory coming in on Saudi Oman front as well, because that is also there in the line of fire. So right now, what is the situation there? You said it's all working, but any advisory or steps that you all have to take?
Right now, no. Actually, on the first day when it happened, we shut down some of our projects on the eastern border of Saudi. Okay. But then there was nothing which was happening. And then we spoke to the client and everything, and they said there's everything normal. So Saudi is completely normal. UAE, obviously, first day the factories and all were working. But then UAE has now issued an advisory of, work from home and other things. So basically, and they said you should avoid being in the public areas, etc. So because of that, and also keeping in mind the safety of the people with, missile parts falling, etc., we decided to, shut down our UAE operations.
Right, sir. Thank you so much, sir, for joining us this morning, just giving us an understanding on what is happening on ground over there as well. And we would request you to join in again with more updates as and when anything comes in. But thank you so much, sir, and hope your team stays safe there as well. Thank you so much for joining in. So that was the management of KEC International giving us an update in terms of what's happening in terms of West Asia and the updates over there. As of now, UAE side, they've shut the operations. Oman, Saudi continues to be there.
That's right. Vinny, in terms of the markets, we are down. But, the news flow that's coming in from the Middle East is not very, very encouraging in the last hour or so. Hopefully, things settle down. But as of now, no signs of any big de-escalation. So I'll be looking forward from a humanitarian aspect that we see some kind of de-escalation in the Middle East. But that's actually absent. For the time being, we leave you with the markets down close to around 300 points on the Nifty Bank down close to around 500 points, and just around 400 stocks that are advancing. Chartbusters wraps up, but Trading Hour comes up next.